What's up, guys? Today we're going to be talking about liquidity zones within the crypto market, right? And what liquidity is, how to identify it, and potentially how to trade it and make profit off of it, and also how to protect yourself within becoming that liquidity, right? What is liquidity? Liquidity is trades, right? The entire market is based on liquidity. You think the market is just, you just make money out of nowhere. You can just enter a trade without anything being happening in the background. No, we need liquidity to be able to fill a position, whether it's limit orders, market orders, etc. That's liquidity, right? And I'm not going to go into the too in-depth basis of liquidity because you guys should already know what it is. If you guys are trying to, understand how to find liquidity zones, etc., just do the diligent research and then come back to this video. All right, so I'm going to tell you guys how to identify liquidity, and this is how I would do it. So let's say we're going the 15-minute time frame on Bitcoin, and we're going to be identifying liquidity zones and pretty much the trend of the market. First, you want to identify the market structure and the trend of the market. Right now, I would say we're in a bearish sentiment. We just got rejected from this range that we put up at resistance, and we never broke through. So we had a really big drop, as you guys can see, on Friday, and all the way down to the downside. And we placed in our low at 19,200 at that support. And then we just been ranging ever since. Now, a lot of people long this area, 19,200, and they long like right here. And then they set their stop loss right above this below this wick. That is what 90% of retail traders do. It's a strategy. Okay, guys. All right, set your long position and go ahead and set your stop loss below the low, because if you get stopped out, that means the trade is done. It's invalidated. So people get stopped out and they set to take profits all up here. Now, a lot of people are greedy. Instead of just closing up here, they're going to wait higher for this level. I would have considered this a win and I would have been done, but there's still liquidity in this zone. There's a lot of stop losses being waited to be taken out. So what does price do? Ranges, consolidates. Boom. It takes out that liquidity. So what you would do is mark this as a zone of liquidity by that wick. There's where stop losses are at, and price is probably going to come there and create a new low. What does it do? Price comes down there, takes out that lows, take out the liquidity, take out all the stops. So everybody in this long got stopped out for no reason, because guess what happened? Price came down, took out those lows, created a new low, lower low as a wick, I guess you say, and then it just went right back up to exact price. You got stopped out for no reason when it didn't even actually break down, because your stop loss is there to protect you from a break of market structure and to break down. All price did was come down, take your liquidity, come back up. And guess what happened? You mark this again right here. You mark this wick again as another liquidity zone. So new longs are up in this area, stop loss below this wick. Same thing happens. Market ranges. In fact, we actually get rejected from our Fibonacci, because you can do from high to low. If you from this wick to this low, and boom, look at that. As long as you have your stop loss above the 786, you would have not got stopped out in your short. So that would have been a good rejection from the Fibonacci CC retracement all the way to the downside, as long as you hold it out. And guess what happens, right? Price ranges. New longs are in place. What does price do? Comes back down, takes out liquidity, moves back up. You got stopped out again for no reason. And in fact, it's only $100 away from this consolidation phase. So you got stopped out again for no reason. And if you were expecting more upside, you got stopped out and you lost money, or you just held profits, or you just broke at a break-even point. New positions get filled. Price moves back up, gets rejected from the CC again, from high to low. Price gets rejected on New York Open. Price is moving down again. New wick, new low. What happens again? Liquidity's taken out again. All those longs get stopped out, and then that's just how the game is. And you know what's funny? I wouldn't be surprised if price just moved right back up to this zone or even higher. So that's just how the market works, right? The market is in place to pretty much destroy everyone, whether if you're long or short. Now, shorts obviously won in this downside. I mean, obviously, if you're in a downtrended market and you're in lower highs, you obviously want to be prioritizing shorts rather than prioritizing longs, because liquidity, right? The market is going to want to, the institutions are going to want to, or quote unquote institutions. There's no really big institutions in crypto yet, from what I know. So price is going to move back up, get their positions filled, their shorts filled. Boom, price keeps moving down, does the same thing over and over again, and longs just get wrecked all the way on the way down, and just overall lower low, and it's just the wick to wick is just showing that price is coming down. So that's just how liquidity zones work, and not how to get wrecked by them, guys, because, this is how the market works. The market is here to destroy everyone. It's a competitive market, right? So you need to understand how the market works. You need to understand how liquidity works so you can capitalize on it and be able to put into your arsenal. And that is it for today's video, guys. Liquidity zones on crypto. I will do I guess you could say breakdowns and technical breakdowns of the stock markets as well, CFDs, equities, whatever, like the S&P, US 30, forex. I'll do all that stuff too, because at the end of the day, everything in the markets, quite frankly, the same. Price moves up, price moves down, and that's just how it goes. So yeah, that's in today's video. Hope you guys enjoyed. Leave a like, subscribe if you guys enjoyed the content. This is pretty much the first video of the channel. We'll be uploading more technicals, predictions, and just helpful course content for traders. And hope you guys enjoyed, and I'll catch you guys in the next one.